What's up, guys? So I'm rebooting, I'm restarting, I'm making sure I'm gonna do this financial thing again with this podcast, whatever you want to call it, this series, this talk. So I want to start off saying that first off, I'm not a certified financial planner or advisor. This is just my experience. This is just me being a finance graduate from the University of Tampa. So all of this is from my experience. This is not certified advice. Take it how you want it. But I think I give pretty good advice, but remember, I'm not certified, so I don't want to get in trouble with FINRA or the SEC. So, once again, I'm not certified licensed. This is just personal experience from what I've learned, from what I've read, from what I've understood throughout the past years of me studying finance. So, I want to restart this whole thing by talking about credit cards. So, credit is leverage. So, sometimes you might have to use your credit card to pay off a bill because you're not getting paid right then and there. So you're saying, well, let me put on a credit card and I can pay it over time. Yeah, that's good. But some people still don't understand how to use a credit card. They just take it, pay it, and then they leave it and they say, I'll pay the minimum payment each month. Well, here's the thing. First off, let's talk about how you get a credit card. So you can apply on any credit website you want to. Go to Credit Karma, if you want to go to Discover, Amex, if you want to go to any credit card site, apply, see how much they'll let you get from the credit line and see what really fits you the best. Don't go after the big cards. Like, if you're experienced with credit cards, go after Amex. Cool, that's great. Go after Citi, go after anything that gives you travel points, rewards points, things that you can handle because you understand from prior experience. But if you're new, just get something with cash back, something simple to build your credit up, something that shows credit companies, hey, I'm responsible, I'm taking care of my card. So, like Discover, that was my first card, and that started off with like a $700 credit limit, but then it bounced up to 1350 and it's going to bounce up even more. But that's because I'm being responsible with it. So just start out. Don't try and get the big name cards that have a lot of things on it that you cannot handle. Start out simple. That's number one. So after you do all that, get your card, you're saying, well, what is all this stuff? Terms and conditions, I don't care. I just pay it off or pay it monthly. Well, there's a thing called APR. So I have a whole list right here in front of me for the things of APR. So I want to get into the math right quick. APR is the annual percentage rate, the rate you will be charged on a rollover balance. So if you have a balance from one month to the next, let's say you put 300, now let's say you put $500 down on the credit card. And then once you put the $500 down, you're like, yeah, okay, I might, pay it off, and you forget about it. Okay, say if you have a $500 payment rolling over each day for the 30-day billing cycle, 30-day billing cycle, okay? So let's say your APR, your annual percentage rate is 24.99. I just pulled that out of the blue because I've seen a lot of them be 24.99. I've seen a lot of them be 17.99, 15.99. It depends on the credit card company, okay? So let's say you have $500, right? And it's occurring every day, and it's $500 till the end of the next billing cycle. Okay, so that's $500 times 24.99. When you do that, you have $124.95. Now you have to multiply that by the 30-day billing cycle because that's rolling over each day. It's not accumulating each day, but it's rolling over. So that's the balance you have each day. You don't touch it. And then after that, you get $3,748.50. Now that's everything in a month. That's the 30-day billing cycle for each day. Now you divide that by 365 because annually means one. So annually is each year. So you divide that by 365 days because this is a daily thing, and you will get $10.27 per billing cycle that you have to pay. Now that can change and be recalculated depending on what balance you have left over. But let's just use that $500 as the basis. So you say, okay, $10, $11, that's not anything. But here's the thing. See, that can be one of your percentage rates. See, your APR and the percentage rate, you have intro, purchase, balance transfer, cash advance, and your penalty APR. So your intro APR, you first get the credit card, and then they tell you, oh, 0% APR, 12 months, 15 months. And you're like, well, okay, I guess that means I don't have an interest rate. Technically, yes, but also at the same time, no. See, 0% APR means that you make your minimum payment, you're good. You don't have to worry about having the rollover balance accumulate any fees for those amount of months. But here's how credit card companies get to you. They understand that, hey, once this introductory period goes away, you're going to start forgetting about your card. You're going to start saying, oh yeah, put it on my card, put it on my card, put it on my card. I'll pay it off, I'll pay it off. But you don't have that introductory period anymore. Now you're using your leverage and it's becoming a liability to you because you're saying, put it on my card. Well, the more you put on your card, the more balance that rolls over. So when that introductory period is gone, then you're going to have your APRs start to hit you. So let's go over the APRs. intro, like I said, 0% usually. They just want to get you in the door. Tell you, hey, here's a gift on us. 0% for 15 months. Just pay the minimum payment. You're good. You don't have to worry about anything being accrued as interest. Cool. Now, purchase. It's the rate charged for new purchases between the end of the billing cycle and when your payments due. So say the end of the billing cycle is the 30th or 31st. Okay, cool. Then between that day and say your payments due the 5th of the next month, between those days, you make a new purchase, you will be charged on that amount. So whatever amount you have there, you will be charged on that. That is your purchase APR between the end of the billing cycle and when your payments due. Now, balance transfers. So obviously, banks aren't just going to let you get away for free with transferring one balance from one card to another. They're going to say, well, if you want to split up payments, you're getting charged a fee. And that's a balance transfer fee. That's the whole thing, basically. You will get charged a certain fee on whatever amount that you transfer from one card to another. So say you got $1,000 on one card. You're like, man, I don't want to pay this all on one card. You will transfer it to a different card, 500, 500. There goes the split. You will get charged on that 500 that you transfer to the other card. So that's balance transfer. Now, cash advance. Now, this is something that you should really do in an emergency, like dire emergency or something that really has popped up and you can't afford to pay it all at once. So cash advance is you pulling money from the credit line. And you're like, what do you mean pulling money from the credit line? You're pulling cash from your credit line. So say your credit line's $4,000. Okay, cool. I got to pay $3,000 in something. So now you pull $3,000 out. You will get charged. And usually cash advance is the highest APR because credit card companies are like, you're pulling cash out from your own line. So now let's see how responsible you are with paying back the cash that you took out from credit. So after you take it out, you get charged a really high APR, probably 25, 29, 30, who knows? Whatever the credit card company says. But that cash advance is something that should be used for things that are an emergency. Don't take it out and don't forget about it. So next is the penalty APR. So you're saying, well, penalty APR. So what's the difference between APR and penalty APR? Well, your penalty APR is when you miss a payment or you pay later than the due date. So say you're like, oh man, I forgot about my card. I'm 2 months past due. But you say, okay, that's good, let's go ahead and pay it. You pay that, but you get charged a penalty upon your APR. And that might wipe out your 0% APR if you do that within your first however many months they give you. So your penalty APR is when you miss your payment or you pay past due, like late past due. And they will charge a high APR upon the APR to say, hey, this is your late fee. So it's a late fee that's charged with the fee you owe. But the Card Act of 2009, and I quote, it states right here, it requires companies to restore your regular purchase APR 6 months, after you made 6 months worth of consecutive payments. So after the APR penalty. So if you're paying the minimum payment, you're paying off 6 months, you're good. You get your regular APR back. You don't have to incur the penalties anymore. So using a credit card, you have to be financially responsible and financially literate when you come to all these things. So you have to understand, how much am I putting on my card? What's my APR? Calculate APR. I just did the math. Let's say you have $500. I repeat again, 500 rolling over from one billing cycle to the next. Okay, so that 500, and let's just say your APR is 24.99. So you multiply the 500 times the 24.99 and you get $124.95. Now you multiply that because each day that's the balance remaining on your statement. So you're just rolling over 500, 500 every day. That's consistent. Multiply that by 30 days, the billing cycle, which gives you $3,748.50. Now, that's the whole month billing cycle. But since it's an APR annual, then you divide that by 365 and you get $10.27. Now, like I said, some people say that's nothing. But because you incur those fees and you incur those payments, that's extra, those interest payments, credit card utilization is going to go up, and then credit card companies are going to say, well, you're not being so responsible. Let's go ahead and drop your credit score. Let's go ahead and not give you a credit line increase because you are not doing well with your card. So in order for you to have a successful or a good journey with having a credit card, first things first, to be responsible. Understand your APR, understand how much you can handle on a credit card, and understand how are you going to use it. Because anybody could say, I could put everything on it, pay it off. Cool. But credit card companies usually want 10% or lower utilization of your credit line. They just want to see that you're really responsible with paying off a card on time or paying it beforehand. Yes, some things happen in life that we cannot, contain, or things happen that we are not in control of. Yes, those are factors. You can work it out with your credit card company. But if you're being irresponsible and saying, "Oh, well, I can do this all day, I'm good," and you forget about it, that's on you. So this just intro for credit cards, understanding what the APR is, all the APRs under it are, like APR and then whatever's under it, the different types of APR obviously, and how to get a credit card. And this is going to be just the first installment, but I just want to make sure everybody understands. Once you get a credit card, don't take it for granted, but also don't be irresponsible with it. Treat it like somebody's using your debit card in a way. So you won't want anybody making a whole bunch of random purchases and racking up charges on your debit card. No. So just say credit card is going to be for things that like groceries, utilities, the bills, etc. Don't go ahead and drop a down payment maxing out the credit card on the card. They want to see you're responsible so that way you can be having favorable odds with companies that want to give you auto loans, insurance, homeowners loans. Credit card companies are the way to make sure that you get your favorable interest rates when you're responsible. So having a credit card is just one step in the loan business of having favorable things come to you because you're using leverage wisely. Keyword, wisely. And well, that's pretty much does it for today. I'm going to have more installments of this. Thank you guys for tuning in. If you have any questions, let me know, and I will keep continuing this. So Financial Literacy Series, Credit Cards, Part 1.